Fund Supermart, your online gateway to unit trusts.
What is your expectation on China and India in 2016? Are there any key investment themes that you expect to play out?
Okay, let's start with China. I think the first quarter in China, I think will be, we're still looking at a very volatile market in the first quarter of China. The key reason why is because China is actually in a transition period, restructuring the economy, and definitely nowadays, when China sneezes, the whole world caught flu, right? So India will also be one of the countries that's affected. So if you are talking about the themes, what we are looking at this year is very much on bottom-up approach. So with expectation, the volatility will persist within the first half of the year. So for China, what we like is actually in terms of consumption, especially on the white goods, meaning the electrical goods. Thanks to the boom in the property sales in April, since started in April last year. So as usual, when you have property boom and when people buy properties, the second things that they're going to look into is electrical fittings to the house. So there's something that we like about China. And on top of that, we also like the sports equipments in China. So partly also because there's a growing aspiration for people to join marathons in China. So there was a study shows that year on year between 2014 and 15, what they noticed is that there's about 100% jump in terms of the marathons event in China. So that's telling you the market is growing for the sports equipments. As for India, again, it's very much on bottom-up approach this year. We will be very cautious when it comes to stock picking. One of the stocks that we actually quite like, or should I say the theme that we actually like, is actually called aspirational consumption. What it means is that when the middle class are growing, there tends to actually in a sense showcase their wealth, when it comes, especially coming to the transportation they are using. So probably instead of using a normal motorbike, they aspire to use a bigger bike now, things that's more than 250cc, for example. So that's one of the stocks that actually we have been positioning in, which just announced the results, and year on year the sales actually has increased about 50%. So these are the few themes that we are looking at this moment.
As for China, how is the China slowdown affecting your portfolio positioning for 2016?
For China, yeah, it's very much like India. It's very much on bottom-up approach. We are looking into the stocks instead of the market as a whole. Good example, if you look at the market as a whole, you might want to invest into the banking stocks in China, which is actually trading in a very low single-digit PE. If you look at it, definitely it's very attractive. But then again, if you look at the macroeconomic itself, you might want to be more cautious when it comes to exposure into the banks. So yeah, that's the reason why we actually we'll be adopting for the first half of the year very much on the bottom-up approach for China.
Which sector in India are you bullish on and bearish on, and why?
The other one that actually we quite like is the microfinancing. Right? Why we like microfinancing is that first thing, the economy is booming, and Moody's government is trying to uplift the people towards the middle class. So, and definitely those people who are working in the farm, especially, are going to be more aspirated to actually buy more things like electrical goods, furnitures, and so on and so forth. And that's actually a big market for microfinancings. So just like when you thought, when we see the mortgage rates probably in India, you get a mortgage, you pay about 70% interest rate. When it comes to microfinancing, you pay about 20% for the interest, and that's how big of the margin that they are making. And on top of that, if you look into India market, moving on, Moody will be actually very much open up the economy, for foreigners to participate. There's a made in India aspirations. So obviously, when you open your economy, banking will be one of the sectors that a lot of foreign banks, especially international multinational banks, will be eyeing on, and it will make a very competitive environment for the local environment. So the foreign banks who came into any country, they can capture credit cards business, they can capture the mortgage business, but something that normally foreign banks were actually trying to avoid is actually microfinancing. So as for that segment itself, the current existing players should be safe.
Is there any sector that you're a little bit cautious on in India?
We actually have been started to be very cautious when it comes to the pharmaceutical side. One of the reasons why is that there was a recent delay in terms of the US FDA approved in the generic drugs. So that's actually affected quite a number of pharmaceutical stocks, right, which have a high expectation early part of the year that there will be quite a number of products being approved.
How much consideration is paid to political as well as regulatory issues when making an investment for the portfolio?
All right, I'll break it into two. Let's start with China. Okay, and no doubt about it, I think we have to acknowledge in a sense that there is very much on the regulatory blunder that we see that caused the market to be so volatile so far since the third Q of last year. So yeah, that is something that we actually are looking very tightly on that. But let's look back into the flip side of the whole picture. Why does all this blunder happens? The reason why it happens is because the Chinese government is very aspire to actually help to support the market. They want the market to be supported, and in a way that they want a slow bull run. All right. So if you learn about the intention of the Chinese government, I think that is what you want to see in the market, and you want to tap on the benefits riding on in the future. As for India, I think since the Bihar election in fourth quarter last year, there are growing concerns about the political scenes in India. Especially, there was high hope that BJP, Modi's lead government, BJP party will actually be wrestle the Bihar state election, but it doesn't turn out to be that way. So, and as such, they might face some obstacles when it comes to reforms policy, especially the GST and the land law in the parliament in India. So that is something that we actually has been very cautiously and follow up very closely on that.
What is your positioning strategy in terms of your investment in China and India?
Positioning. I think for this year, as a whole, India as a whole, we still remain very optimistic. Okay, reason why the forward PE trading in India is not too expensive at this moment, about 14 times PE. So probably if you strip up a couple of sectors like the pharmaceuticals, the FMCGs, as well as the IT sectors, the PE probably is trading around almost 10 to 11 times PE, which is I think quite cheap for a country that's very likely could grow beyond 7% for the next couple of years. So there's still a very much opportunity in India as a whole. Whereas on China, if you look at the H shares market itself, which is trading around, I think yesterday I just have a glimpse, probably around 6.1, 6.2 times PE, which is I think historical low. That is actually quite cheap. But then again, the external headwinds that you are seeing, and of course the bad media publicity about China market at this moment, that could actually still drag down the stock market as well, especially causing more volatility in China. So it will be very much cautious, optimistic for China.